Hey guys, this is Andrew for TradingSenses.com. I've been working as a professional trader for the past 6 years in Hong Kong, and I'm doing YouTube videos right now because guys, I want to share my experience. I want to show you how I do my analysis, how pro traders are actually working, what kind of tools and techniques we use to make money on the markets. So if you want to know about all this stuff and see how we build up our views and set up our trades, you are in the right place. So today I want to make an update on the weed stocks. So I'm going to pick up Tilray and Sndl because they are for me the two most hot stocks and make an analysis on it. Let's get into it. So let's start with Sundial. What can we see? Just first technically, then we're gonna quickly go to the news. Technically, I did a video on this one, guys. I was saying that 120 was a nice support level. I was saying don't buy it here, guys. Like I always say, don't FOMO, guys. Don't buy those breakouts that are crazy. If you miss it, it's fine. There are many opportunities. Go to the most likely ones where you can set up trades with tight stop losses. So here we had one of those opportunities. So on a daily time frame, you can see so Sundial just went crazy up and then came back. So guys, here it was a resistance level. You can see, guys, quite easy to spot. Those horizontal resistance or support levels are easy to spot. The most recent it is, the better it is. And you need to find where you had some reactions in the past. So here, 1, 2, this one is not clear, all right? I can put it here, I can put it here. But look, the most recent past, where was the resistance, guys? Where was actually the area where sellers were increasing their positions? It was at 130. So then I try to find something that fits the best. So this one is a bit high. So I go here. So this is my support level, 128. And what happened? So a few days ago, guys, you can see, I'm not sure like which day I'm going to release this video. Maybe I'm going to release it in a few days. So I might have a bit of a lag, but I do it on the 25th of February in Hong Kong. So this is like the US session overnight, 24th of February. So what we can see, guys, is that we had the support level that got broken. Quite bad, guys. You can lose here 30%. So you know, that's why where you put your stop loss is very important. So you have, yeah, around 15-20%. So you know, for those penny stocks, I like to take 20-30% as a stop loss. And here, once again, guys, you buy, you could get stop loss. It depends on how big is your stop loss. But if you're not getting stopped, then you don't have the second consecutive candle below the breakout level. So it's no reason to change your trade. Then you have this nice rebound, guys. So this support has been tested, not broken. And now, guys, this is a very small move. This is only 15% up. Guys, I expect much more to come. Where are our next resistance levels? So here, of course, this is one obvious resistance level. You see, guys, I was checking here, and this is how I found this one. So of course, this one happened already, but it's going to be the new one. But guys, once a resistance has been tested once, twice, 3 times, it gets weaker and usually it gets overcome. So here I expect the price to come back at these levels, so around 200%. So once again, you can make 200. Guys, be ready to lose 30. It's like a 1-to-6 risk reward ratio. It's very good. So guys, very important, logarithmic scale for the stuff, very important. Otherwise you won't understand what I'm doing. You're going to try to do the same. Go on TradingView. It's free. I mean, I have the pro account, but in the free account, you have a lot of tools you can use already, and try to do some chart analysis like I do. So here, another thing you can do, you check the moving averages, you go on the hourly time frame, and you can find a level to enter. So for now, we are trading below the 200 period moving average. That's why the price action is contained. But things are going to change. You see, the breakout occurred here, guys. So I'm trying to find the one that is fitting the best. And guys, look what I had here. So now it's green. So I didn't go on the shorter time frame when I did it last time. Right now I'm doing it. And you can see here we had this bearish trend that was resistance. Here, consolidation. We break out. We retest it, and guys, it's like a double support level. You had the support level done by the downward sloping trend line that was on the short time frame, and on the longer time frame we saw that 128 was a strong support, and guys, it got broken here and then retested. So it didn't go to 128, it went to 134. But guys, this is approximative numbers, and right now we are pushing higher, so maybe we're gonna have one more retest. But to me, this is ready. We had this consolidation here that took place for quite a long time. So I expect something like this. So maybe this is a bit too bullish because guys, look at the short interest. So this could happen if you have a short squeeze. Without short squeeze, it's hard, guys, to get such strong moves up. Let's check the short interest on the stuff. So I go on Market Watch. As I told you guys, here is actually the schedule of the release of the new short interest. And the last one was January 29th. It was very controversial. Different websites have different data. Now the 12th of February has been released yesterday, guys, on Wednesday. This is the release date. I'm going to put this in the description of the video so you can be able to go and check it by yourself. This is true for all the stocks, all right, the US stocks. So now on Market Watch, it's updated. So let's have a look at Sundial, Sndl. Right. Okay, data of 12th of February. You can trust this. Then have a look at the total public float. It must be close to the outstanding shares. Here you have 50% difference. So I'm not 100% sure the public float is not bigger. Usually it's very close to this. The difference between the public float, which is the shares available for trading, and the outstanding shares is only the insider shares. So shares owned by people who actually manage the company. So it's usually very close, especially for those market cap around 1 billion. So I think the public float might be underestimated here. And so we have at least maximum of 10% shares that are shorted amongst the available shares. So this is telling me, guys, that if the price is going higher and hedge funds consider that the stock is overvalued, they're going to short it, all right? Because as Charlie Munger said, as long as shit can be sold, we're going to keep selling shit. Sorry for my language, but this is exactly his words. And he's saying this because, you know, hedge funds are here to actually control if there is any mismanagement in the company. You think, guys, that this is not good, but actually it's kind of healthy to have, like, you know, people who work hard to actually check if the job is done properly and if there is no mismanagement. If there is, they're going to short the company. You can think it's not moral, but I think that it brings some balance in the finance industry, which in some way is good. So anyway, what I'm saying is that if the price action goes at levels that make the stock overvalued, they're going to keep shorting it. So careful, guys. 10% of short interest means the short squeeze is less likely to happen, even impossible, right? We need 30-40% for those market caps. Quickly, let's go to Tilray. So it's a bit the same story, guys. So I'm not going to explain in detail how I find my levels. So resistance. So 54 is the next resistance level. Same thing, guys, here, the maximum level here, the maximum level here. All right. So this was our support level. It got touched 2 days ago. So guys, I was telling you here, it's a nice level to buy, and you would have get this trade down if you buy it here and stop loss 20-30% below. And now, guys, it's probably going to move higher. So I'm bullish on Sndl. I'm bullish on Tilray if we stay above those support levels. So let's quickly check the short interest on Tilray, guys. Updated 12th of February, same stuff, 18%. It's a bit more. So here a short squeeze is more likely to happen. So just keep this in mind, guys. So that's it from me. I hope you guys enjoyed this video. I hope you know where to find your data and how to actually use it to, you know, use the market dynamics, knowing, for example, the short interest, and to use the support and resistance levels in the good way. So if you did, please don't forget to click the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to short. I see you guys.